it looks more likely that we're going to continue, bouncing around inside of this consolidation channel, at least until the end of the year, possibly into the new year. And then, I would expect, time analysis to line up with our next big swing as far as like, quarterly analysis. So, we could potentially sell off until the end of the year, or reverse to the upside until the end of the year, and then I would potentially expect a reversal based on the time analysis of the markets, because typically on the longer time frames, things like that do line up. Like you'll see things in 3-month blocks or 4-month blocks or 6-month blocks or year blocks, as opposed to like shorter time frames. Trying to do time analysis is much more difficult. So, but cycle analysis, or longer time frame analysis, has much more of like a correlation over time, and it makes sense because you think about people like trading all year and then taking off time at the end of the year to enjoy it, or different market factors depending on what you're trading, whether it's oil or stocks, soybeans, whatever it is. So, well, there we have it, guys. There's our technical analysis on Bitcoin and the cryptocurrency market. We're basically at this point in time not seeing anything that is telling me one way or another that we are going to continue or sell off at this point in time. I'm not seeing anything that's telling me that the market is ready to reverse back to the upside, although this is a key and critical level that we're definitely paying a lot of attention to. And if this does start to look bullish, may start building a position at least to come and test the top of the range up in the $90 to $100 range. We could easily see a move up there based on this chart right here, which would be another 20% from where we're currently at. And honestly, the risk reward, if you're going from like the bottom of the channel down here, assuming this would hold, that's 12.5%. And if we're going to the top of the channel up here, we're talking about 23%. So essentially, that's a 2-to-1. If you were managing your risk off this entire channel, which we would not be doing, we would manage it off of a key Fibonacci level or a moving average. But essentially, say you manage it off of this position right here, and if we came down, and again, it's not financial advice, I'm not your financial advisor, but let's go ahead and set up a long position, and clicked on the wrong one, didn't I? Let's set up a long position basically from this swing that we're at right now. If we said we were just literally going to get into this exact position at this exact price, and we're just going to manage our risk off of the 886, essentially saying that if we were going to come down here and take out the low, that we would be taken out of that position. And this is basically the I'm going to line it up there. That would be that. And then, like always, we're going to set it up 2 times, and we're going to have a conservative target as well as put it at the 1.618. We'll do just a slight front run on that, and we'll do just at the top of the channel here. And essentially, we're looking at, risk reward off of that initial trade is not that great. So what I would do is I would probably put my stop loss closer down here and say, like, if we took out this low right there at 5.5% stop loss with a 12.5 to the upside, that's basically going to give us risk reward of 2-to-1. I prefer 3-to-1 in situations, but I probably would take that depending on how the market looks, bullish or bearish. And then we have a 2.7-to-1 on our second trade here. As where if you try to run that same trade to the downside, it's going to be much less profitable. Now, if you were able to take it off of the heartline resistance here, you would be much more likely, because essentially you're 50% of the channel, and that's essentially like where we're managing risk off of. But depending if you were looking more for a swing trade or a scalp trade, this could essentially, if this turns out in the long term to be the reversal of the trend, which still has a high likelihood that we reverse off the 618 golden fib, and then continue to the upside, this would essentially be the perfect trade, because, and again, I don't want to go crazy and get super bullish. This is not financial advice by any means, but, even if we start coming up here, like, and, retest the high or whatever and get rejected, that's like 74% to the upside. I mean, that's pretty crazy. But basically that trade itself right there is with a 20% stop loss, 17% stop loss, and a 74% move to the upside, assuming we got rejected, and put in a lower high on the macro, that is still like 4.5 to 1. So, you could, again, not financial advice, but you could set this up on 5x leverage, on a position, and essentially, pre-liquidation price would be your stop loss, and 5x leverage would be 350% gains. So, but that's gambling. That's throwing your money on a roulette wheel, and you might as well go to the casino for that and have fun with the ladies and the drinks. You know what I mean, or whatever your cup of tea is. I know I love Vegas shows, all that good stuff. So, but anyway, that's not financial advice. I'm not your financial advisor. These trade setups are not meant for you to take. They are literally just placed on here to give specific examples. I am not encouraging you to take these trade setups. I am not planning on taking these trade setups. And although they are both green and drawn to the upside, I am not necessarily bullish on this market. As a matter of fact, depending on what time scale we're looking at on the macro time frames, I'm actually bearish on this market currently until I see otherwise, and this pop up to the upside and a little bit of like a relief rally or dead cat bounce this time is not signaling to me that we're going to get continuation necessarily. And the last thing I'm going to do is get bullish on this market off of that tiny insubstantial little move with almost no volume to back it up. So there we have it, guys. Crypto Trend Trader, daily Bitcoin technical analysis, and I'm signing off.